Hello, my name is Benjamin Hiller, and today we're going to be going over a dual class assignment with 6985 Taiwan Young and Administration 6020 with Miss Bakeman. Today we're going to be going over the PLO, which means Program Learning Objectives. The first objective is specific finance knowledge and skills. Each student should obtain required knowledge and skills in the area of financial market and environment, financial statement analysis, corporate finance, portfolio management, global equity investment, fixed income, derivative, and alternate investments. The second objective is communication. Each student can effectively communicate financial analysis, either written or oral. The third is problem solving using IT. Each student can apply statistical methods to analyze financial data and develop quantitative techniques to assist financial decision making. The last reasoning is ethical reasoning. Each student can identify and evaluate ethical issues and articulate a realistic recommendation to inform sustainable decision making. Financial markets operate through various platforms including stock exchanges, over-the-counter markets, and electronic trading platforms. A financial market is a marketplace where buyers and sellers trade financial assets on a stock exchange around the world. In these major financial hubs, which are placed around the globe, stocks, bonds, currencies, and derivatives are traded, sold, or bought. The entities and groups can include sovereign wealth funds, pensions, corporations, entities, private investors, and many more. The places include such as Japan's Tokyo and Nikkei, the Australian stock market, the ASX in Sydney, France's stock exchange, the CAC 40 in Paris. The United Kingdom has its exchange in London with the FTSE 100, Germany and Frankfurt called the DAX, and lastly the United States exchange is in New York City, New York with the S&P on the New York Stock Exchange, the NYSE. These cities around the world play a crucial role in the economy by providing liquidity, enabling efficient capital allocation, and allowing investors to manage risks. The stock market is the equity market. This is a place where shares of publicly traded companies are bought and sold. The capitalized companies trade on the exchange for partial ownership equity. Investors can buy and sell shares, receive dividends, and gain or loss from stock price appreciation. The bond market is the debt market. This is a market for trading debt and securities like government bonds, corporate bonds, municipal bonds, and junk bonds. Investors lend money to governments or corporations in exchange for interest payments and the return of principal at maturity. The bond market is critical for funding governments and corporations. The foreign exchange (forex) market is the market where currencies are traded. It is the largest and most liquid market globally, with trillions of dollars in daily trading volume. The commodities market is a marketplace for trading raw materials like gold, silver, platinum, tin, and other metals, oil, and natural gas, which are considered hard commodities. Soft commodities such as cotton and agricultural products. Investors use to hedge against inflation and diversify portfolios. The function of financial markets are price discovery, liquidity, capital allocation, risk management, and financial market environment. The financial market environment encompasses the conditions, factors, and influences that shape the functioning and performance of financial markets. It includes economic, political, legal, and social factors, and is influenced by global and domestic events. The economic environment has different influences that can affect it positively or negatively. Monetary policy is set by central banks like the Federal Reserve, the Fed, or the European Central Bank, the ECB, to influence financial markets through interest rate changes, open market operations, and quantitative easing. These central banker activities have a stimulative effect on the amount of money that they can issue. The central bank's monopoly is on interest rate market on the treasury market. Low interest rates tend to boost stock markets, while high interest rates can depress them. Fiscal policy is government spending, taxation, and budget deficits or surpluses affect markets. Central banks quantitative easing, aka central bank buying paper assets like currency of national issuance, stock equity purchases by buying the stock market, and government issued bonds, aka treasuries. These assets are artificially injected into the economy. A government deficit in large amounts comes with consistent downside. Persistence helps in creating a larger supply of currency, which is inflationary. Inflation and deflation are the rising and falling price environment. Stable governments foster investor confidence, while political instability increases uncertainty and can negatively impact markets. New financial regulations, such as the new departments or deregulation, can influence how markets operate. Tariffs, trade wars, international agreements affect currency and commodity markets. Changes in trade relations between countries can have ripple effects across global financial markets. Legal and regulatory environment is regulatory bodies such as the Securities and Exchange Commission, the SEC, and in the United States taxation agencies like the Internal Revenue Service and the Federal Reserve, which were both created in 1913. The taxation agency plus a central bank with private investors print the money and have a monopoly over the world's interest rates. Convenient to fund a war a few months away in 1914-1918 in World War One. The Financial Conduct Authority, the CFA, in the UK ensures transparency. The United Kingdom Central Bank was started in 1694. The United States of America and the United Kingdom have currencies that are the two world's oldest, still in use in existence in our modern world. The two currencies are both down 99%. These institutions are supposed to protect investors and prevent fraud in financial markets. Global environments are financial markets and interconnected globally. Events in one part of the world, such as economic crises or geopolitical tensions, can impact markets elsewhere. Foreign exchange rates are currency fluctuations that impact many different entities, international trade, investments, and companies with global operations. Central bank interventions or changes in trade policies can significantly affect currency markets. Demographic changes such as population aging, migration, and changing consumer preferences can influence markets, especially in sectors like healthcare, real estate, and technology. Factors affecting financial markets are interest rates, inflation, global events, investor sentiment, and technological changes. The conclusion is that financial market environment is a complex, dynamic system shaped by economic, political, and technological social factors. Understanding the interplay of these factors helps investors make informed decisions, manage risk, and navigate the ever-changing landscape of global financial markets. The fixed income with Professor Cardenas class, the main point of bonds is that they are a debt security. Bonds come in various types and forms, including government bonds, corporate bonds, municipal bonds, treasury bonds, and junk bonds, each with a different risk and return profiles. Its liability can be issued by the government, companies, corporations, for investors to fulfill, owning a small or large part of the company's finances. Bonds help in raising capital, risk management, economic stability, preserving capital, diversification, and lastly, income generation for investors. Raising capital is allowed by selling bonds to allow entities to raise money for various projects such as infrastructure expansion or general operational needs. Without diluting ownership, bond investors are paid first over equity investors in the case of bankruptcy. Income generation for investors by collecting interest rates. Bonds typically provide regular interest payments known as coupon payments, which serve as a steady source of income for investors. These payments typically come in quarterly interest payments or in the agreed pre-planned period. Diversification through bonds can help diversify an investment portfolio, balancing the higher risk and volatility of stocks with the generally lower risk of fixed income securities. A great way of diversifying is to invest a certain amount of in government sovereign bonds, aka United States Treasury bonds, to lower risk as governments aren't as prone to defaults as companies do. Ratings from Fitch Ratings go as follows: AAA, AA plus, AA, AA minus, A plus, A minus, triple B plus, triple B, triple B minus, and junk. Preservation of capital, risk management, economic stability. Bonds have an inverse relation with the central bank's control over interest rates. Higher interest rates affect borrowing costs and slow inflation. Lowering interest rates stimulates borrowing as financing costs go down and the lower rate. Central banks have other means of controlling the debt market, such as buying government bonds on the open market to achieve yield curve control. Overall, the Federal Reserve, governments, foreign central banks, banks, corporations have their influence on the bond market. Derivatives are financial instruments that derive their value from the underlying asset, index, or rates. They are used for hedging, speculation, or arbitrage purposes. The underlying asset could be anything including stocks, bonds, commodities, currencies, interest rates, or market indexes. A future is a contract to buy or sell an asset at a predetermined future date and price. This asset is traded on exchanges and are standardized. There's also options, is a contract that gives the buyer the right but not the obligation to buy, call option, or to sell. A put option, an underlying asset at a specified price with a certain period. Swaps are contracts in which two parties exchange cash flows or financial instruments. Forward customized contracts between two parties to buy or sell an asset at a specific future date for a price agreed upon today. The derivatives are hedging on consumers and producers, speculation on an investment, and leverage in which losses or gains are extremely volatile. Alternative investments refer to assets that do not fall in conventional investment categories like stocks, bonds, or cash. They often provide diversification benefits since their performance may be less correlated with traditional investments. Many types of alternate investments include private equity, hedge funds, real estate, cryptocurrencies, and collectible items. Private equity focuses on investments made in private companies or public companies that are taken private through leveraged buyouts. A hedge fund, a large pooled funds that employs various strategies include long-short equity, arbitrage, and leverage to generate returns. Real estate includes direct investment in properties such as residential real estate, commercial real estate, and warehouses. And indirect investment through real estate trusts are called REITs. This provides income through rent and capital appreciation as property values increase. Physical real estate is considered an illiquid investment, while REITs are more liquid based, as you can push the sell button and easily be out. In my case last semester, I had to do a research project on a particular company called Raytheon. This company is doing exceptionally well due to the growing and continuous overseas conflict in Eastern Europe and in the Middle East as well. This company is great for these problems, as it is a weapon manufacturer, aka defense contractor. This project made me feel sick as they profit immensely from the war that the USA supports. The United States of America's annual defense spending is 927 billion dollars as of the 19th of September 2024. Gross profit in 12/30 the December 31st, 2020 to December 31st, 2023 has changed from 8.531 billion to 12.089 billion. This is a 41.7% increase in gross profits. The main question after this is how much more profits can Raytheon gain if a new war breaks out? A great spot for a new hot war would be Taiwan versus China, a new Korea war, or even a NATO versus Russia. Valuations in these scenarios would change dramatically to the upside. Production would fall behind as demand for weapons manufacturers would surge. Companies such as General Electric Aerodynamics, Boeing, Smith and Wesson, and General Dynamics, and especially Raytheon. The price to earnings is quite expensive at 72.13 PE as of August 30th, 2024. Price to earnings ratio equals PE. These geopolitical events may or may not happen shortly, make it hard for an investor whether it is expensive is hard to gauge. The feedback to better improve the class experience on these projects, I think of letting students sway into investing into alternate investments instead of straight equity and bond market assets. These paper assets should be traded off, so school-led, student-led investment into hard commodities. The students would be more creative in showing a complex, diverse way of performing in all manners of specialized investment vehicles. This should be an outlet to let the investment fall into precious metal investments, artwork, precious stones, physical forex, and many other complex products that may be physically obtained. This event would be a great way of supporting the local businesses in the area. Buying physical metal can support local businesses such as refiners, coin shops, art studios, and many more. This sort of investment may allow arbitrage trading of these physical commodities, and thus is a great way to provide the local community with a skilled force that is hard to replicate. The student's best way of getting ahead is to invest in all these different sectors, to be personally best diversified. Owning hard commodities, bonds, cash, equity, and financial derivatives is an effort the school and the student should invest in. This is the sort of investment may allow arbitrage trading of these physical commodities, and thus is a great way to provide the local community with a skilled labor force that is hard to replicate.